When Prime Minister Narendra Modi launched his campaign to eradicate black money in India, it was nothing short of a revolutionary promise. The boldness of demonetization in 2016 grabbed global headlines, an overnight decision that invalidated 86% of the currency in circulation. The streets were buzzing with debates, businesses scrambled, and families stood in line to exchange old notes. But beneath the drama, a bigger question loomed. Did it really work? 10 years, 2 Modi terms, demonetization, GST reforms, and a series of anti-evasion laws later, has India truly rid itself of the black economy? Here's the startling truth. In the last fiscal year alone, gold smuggling at Ahmedabad airport jumped by 65%, with authorities seizing over 179 crore rupees worth of illegal gold. Counterfeit 500 rupee notes have surged by 102%, and India's black stock market, an underground behemoth, handles 70,000 crore rupees in daily transactions. These numbers are staggering, and they raise an uncomfortable question. Despite all the government's efforts, why does black money continue to thrive? And here's the twist. The root cause of smuggling, counterfeit currency, and even shadow markets can often be traced back to a single, powerful variable: taxes. What if the very tax policies designed to strengthen India's economy are unintentionally fueling its black market? We'll dive deep into this economic paradox, uncovering the truths and myths behind India's war on black money. Before we begin, make sure to like, share, and subscribe to Economy Explorer. And trust us, you won't want to miss a single second of what's coming next. Demonetization, a bold gamble. In November 2016, India witnessed a seismic shift when the government announced the demonetization of 501,000 rupee notes, effectively rendering 86% of the cash in circulation worthless overnight. The move was pitched as a masterstroke to eradicate black money, uproot counterfeit currency, and dismantle terror funding networks. Banks were flooded as citizens queued for hours to deposit old notes or withdraw new ones, creating a scene that felt both historic and chaotic. While the initial aim was to expose hidden cash, a surprising twist emerged. Almost 99% of the demonetized currency found its way back into the banking system. Did demonetization achieve its lofty goals, or did it inadvertently expose the limitations of a cash-focused strategy? This question lingered as the nation adjusted to a new economic reality. Goods and Services Tax, GST, formalizing the economy. The rollout of GST in 2017 was heralded as the most ambitious tax reform in India's history. By unifying multiple indirect taxes into a single framework, the government aimed to reduce tax evasion and promote a transparent economy. For many businesses, this was a double-edged sword. While GST brought simplicity, it also demanded rigorous compliance with digital invoicing and return filings. The black market faced a significant blow as evading taxes became more difficult in an interconnected system. Yet, loopholes and challenges persisted, especially for small businesses grappling with the complexities of compliance. Could GST be the silver bullet to bring informal economic activities into the fold, or would its implementation hurdles dilute its impact? Operation Clean Money, post-demonetization scrutiny. To complement demonetization, the government launched Operation Clean Money in 2017. This initiative focused on analyzing suspicious bank deposits and uncovering hidden assets. High-value transactions were scrutinized, and tax notices flooded those who failed to justify their deposits. This created a ripple effect, a surge in formal banking activity, but also ingenious methods to sidestep the system. While the operation achieved some success in identifying tax evaders, it also raised concerns about privacy and the impact on genuine taxpayers. Did the crackdown intimidate offenders or inadvertently push more transactions into untraceable black channels? Black Money Act and Benami property laws, targeting hidden wealth. The Black Money, Undisclosed Foreign Income and Assets, and Imposition of Tax Act of 2015 was a targeted strike against undisclosed offshore assets. Coupled with the Benami Transactions Prohibition Amendment Act of 2016, the government sought to dismantle hidden wealth networks. High-profile raids and hefty penalties sent shockwaves across the wealthy elite, but these measures also faced criticism for being more symbolic than systemic. While the laws were robust on paper, their enforcement often struggled against legal loopholes and entrenched corruption. Could these acts truly deliver justice, or were they yet another example of well-intentioned policy falling short in execution? Persisting issues in India's fight against black money. Gold smuggling, a 179 crore rupee problem. Despite the government's efforts, gold smuggling in India has skyrocketed. At Ahmedabad airport alone, customs seized 241 kilograms of smuggled gold worth 179 crore rupees in the past year, marking a 65% increase. Why is gold such a popular vehicle for black money? The answer lies in its universal value, ease of transportation, and cultural significance in India. High import duties on gold, which currently stand at 18%, create a lucrative incentive for smugglers to bypass official channels. While enforcement agencies have stepped up their game, their success in uncovering smuggling networks is only the tip of the iceberg. Could reducing import duties mitigate this issue, or is the problem more deeply entrenched? Counterfeit currency, a 102% spike. When demonetization was announced in 2016, one of its goals was to eliminate fake currency. Yet, recent data from the Reserve Bank of India paints a troubling picture. Counterfeit 500 rupee notes in circulation have surged by 102% in the last fiscal year. Criminal networks have adapted, finding new ways to replicate the redesigned currency. This rise in fake money not only destabilizes the economy, but also funds illegal activities, from organized crime to terrorism. If counterfeiting thrives despite advanced security features, is the problem one of technology or enforcement? The shadow stock market, a 70,000 crore rupee giant. India's underground stock market, known as Dabba trading, operates outside the purview of regulatory authorities. Shockingly, it handles daily transactions worth an estimated 70,000 crore rupees, rivaling legitimate platforms like the National Stock Exchange. Traders evade taxes and fees by betting on stock price movements without executing real trades. This black market thrives due to high transaction costs and security transaction taxes in the formal economy. If even sophisticated markets like equities are infiltrated by black money, what does this say about the scope of the problem? Real estate, a haven for hidden wealth. Ask any Indian where black money hides, and the answer often points to real estate. A staggering 90% of citizens surveyed believe that undeclared cash is still prevalent in property transactions. Despite government efforts to enforce transparency, the use of cash components in deals remains rampant. High stamp duties and registration costs deter compliance, creating a fertile ground for illicit wealth. Could reducing these costs finally bring the real estate sector into the fold of legitimate transactions? Lessons from global examples. Reaganomics, when lower taxes drove growth. In the early 1980s, the United States was reeling from stagflation, soaring inflation, coupled with stagnant growth. Enter President Ronald Reagan, who unveiled an audacious plan to cut income taxes drastically, with the top marginal rate dropping from 70% to 28%. The idea? Put more money in the hands of businesses and consumers, driving investment and economic growth through what became known as the trickle-down effect. Initially, the results seemed miraculous. GDP growth accelerated to an average of 4.4% per year during Reagan's tenure, and unemployment fell sharply. However, this approach wasn't without flaws. Income inequality widened dramatically, and the national debt tripled as the government borrowed to cover revenue shortfalls. While Reaganomics taught the world that lower taxes can stimulate growth, it also served as a cautionary tale about the risks of over-reliance on deficit spending. Could India adapt a similar strategy, or would it backfire in a vastly different economic context? The Scandinavian model: transparency as a weapon. In contrast to the U.S., Scandinavian countries like Sweden and Norway have consistently ranked among the least corrupt nations in the world. Their secret? An unwavering commitment to transparency and strict enforcement of tax laws. Citizens in these countries have access to a publicly available database of tax records, making evasion nearly impossible. This level of openness fosters trust between taxpayers and the government, ensuring higher compliance despite some of the highest tax rates globally. Could such radical transparency work in India, where the social fabric and cultural attitudes toward taxes differ vastly? More importantly, would citizens embrace it, or would it face resistance from those wary of public scrutiny? Dubai's zero-income tax strategy. Dubai's economy presents a fascinating case study. With zero personal income tax, the emirate relies heavily on revenues from oil, real estate, and tourism. This policy has made it a magnet for global talent and businesses, creating a thriving economy with minimal tax evasion. However, Dubai's success is underpinned by unique factors: its small population, abundant natural resources, and strategic global positioning. For a nation like India, with a population of over 1.4 billion and a diverse economy, adopting a zero-tax model would be nearly impossible. But could elements of Dubai's strategy, such as reduced bureaucracy and incentivized business environments, offer lessons for India's fight against black money? Singapore's balanced approach to taxation. Singapore's economic model strikes a balance between low taxes and strict enforcement. Corporate tax rates are competitive, but evasion is met with severe penalties. The government invests heavily in digitizing its economy, ensuring every transaction is traceable. Singapore also incentivizes honest taxpayers with rebates and simplified filing processes. This dual approach of carrot and stick has positioned it as one of the most efficient economies in the world. Could India replicate Singapore's digital and enforcement-driven strategies to tackle its shadow economy? Practical solutions to tackle black money. India's tax system, though progressive, is often seen as overly complex and burdensome. High tax rates incentivize evasion, pushing individuals and businesses toward informal channels. Imagine a trader choosing to evade taxes rather than parting with 40% of their income. By simplifying tax codes and reducing rates, the government could encourage voluntary compliance and reduce the appeal of black markets. Countries like Singapore have proven that competitive tax rates paired with strict enforcement can create a win-win scenario for both taxpayers and the economy. This raises an important question. Could a similar approach make India's taxation system more efficient? One of the most significant steps forward lies in digitization. Cash is king in the world of black money, but a digitally connected economy could change the rules entirely. The success of initiatives like UPI, Unified Payments Interface, demonstrates how electronic transactions can create a transparent and traceable financial ecosystem. Expanding digital infrastructure, incentivizing cashless payments, and making property registrations digital are essential steps. If every rupee could be tracked digitally, hiding illicit wealth would become exponentially harder. Of course, no reform works without strong enforcement. Even the best policies can fail if enforcement agencies are understaffed or mired in bureaucracy. Strengthening these institutions, introducing stricter penalties for offenders, and holding powerful entities accountable are critical. Swift, visible action against high-profile offenders could restore public trust and act as a deterrent to potential evaders. Enforcement alone, however, is not enough. It must be paired with efforts to foster a culture of compliance. Combating black money requires a change in mindset. Awareness campaigns, celebrating honest taxpayers, and making compliance a matter of pride can create lasting cultural change. What if paying taxes became a symbol of responsibility and social status, rather than something to be avoided? India's war against black money demands collective effort, innovation, and persistence. If you found value in this journey, make sure to like, share, and subscribe to Economy Explorer. Don't stop here. Click on one of the videos on your screen for more insightful stories about the world of economics. Thank you for being a part of our community.